Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So, although on this week we haven't got any significant information, any significant events, except maybe the Jerome Powell statement and the corresponding statement from the Christine Lagarde that was an opposite by their character. So that has brought some volatility on the market, but that was not totally unexpected, actually. At the same time, with this report that we have prepared today, based on the headlines, based on the statements, opinions that come from the analysis of the big banks, we see really a drastic shift in the minds of the investors. So currently, there's more and more speeches about the possible recession, that Fed policy will be too aggressive for current economic conditions. And now, actually, analysis investors and Fed itself actually are speaking not just about some action to 2.75% by the end of the cycle, but currently investors start considering 3.5%, 4% by the end of the cycle, and more opinions appears sounding that speeches that economy of the United States hardly could hold it. So it will be really big impact, and the pace and the speed of the rate increasing will be outstanding. Even in the whole history of the United States, it will be very fast acceleration. If we add here additional the contraction of the balance sheets in the United States, in Europe as well, that will be, unprecedented impact in general in the economy. And more downs currently sound about that economy hardly will able to hold it. We totally agree. And we have even more evident on the current situation. In fact, the director of the IMF tells what we actually talked about in the recent few months and keep talking about it. She said it in just two words. So we are printing too much money, and currently we do not know what to do with this. This is a really honest opinion, and it totally reflects the real situation that is currently covered by a lot of economical judgments and conclusions. But in reality speaking, keeping it simple, that is correct description of the current situation in the States economy. And also she said that it seems that we're too late to change something. So as we talked about this last week, we suggest that dollar should be devalued 2 times in relation to the real gross domestic product. So a devaluation means the bring in balance the consumption in the United States and the production, real performance of the economy. The Jerome Powell actually said the same, but he said it in a bit, in the way of the hints in the current situation. And dollar should be devalued 3 times if we talked about the nominal value of the gross domestic products. This will become evident in the beginning of next year. So as we said, everything actually is moving in the same direction as we discussed, and we do not see any reasons to change our plan that dollar will keep the domination in this year, at least until November elections in the United States, so close to the end of the year. But the weakness become evident in next year, and it also will become evident that Fed measures to control inflation will be absolutely useless. So we will see it, but later. Well, from that standpoint, we're keeping with the same direction and with the same medium-term expectations that euro should keep dropping and dollar should keep rising. And from that standpoint, we keep our long-term target. Well, at least long-term. It's not really long-term, but let's call it as extended target. 1.04, 10.45, we could say. So while on the daily chart, we see also some intermediate targets. So we could see that using the extension on the daily chart tells us 1070. It's 107 right here. And next one stands at 105.60, 105.70. Well, in general, this creates some cluster around 106. Why? Because on the weekly chart, this is also previous lows, 106.35. It also oversold as on the daily as on the weekly chart. And here we have also some extension 105.70. So that will be intermediate target on the way down. There are two reasons for downward continuation right now. First of all, if you remember, last week, on Friday actually, or maybe on Thursday, we mentioned that on the dollar index we have the grabber. So actually this is the grabber on the dollar index that suggests taking out of these lows. This is first reason why we suggest the downward action should continue. This is purely technically. So if we don't take into consideration fundamental background, it's purely on the technical side. So we have the grabber on the dollar index. And on the 4 time frame chart, as we were concerned about this, as you can see, head and shoulders now is failing, which is also technical reasons for downward continuation. So in general, technical picture looks so that downward continuation looks now unavoidable. At the same time as market stands in the way of the failure of the head and shoulders pattern, we think that the upward bounce should not be too significant. So if we get lucky next week, we could get the pullback 108.20, 108.18 area, which seems, well, possible to consider for a short entry with initial stop somewhere above this area, above 108.51. So the emergency way, for instance, if we have taken position and market has broken and up, the emergency way is to wait for downside pullback. So for instance, market hits the confidence here, 108.34, 108.84, 48. So once market hit it and starting the technical pullback reaction on this area, you could out at the break even or maybe with some minor profit. This is the reserved scenario if we will be wrong and market will break this area. In this case, we could use the pullback out from this area to close the position. So that's the technically and tactically how we could manage the positions in the beginning of next week. But in general, overall background stands not very supportive for the euro currency.